This my two Satoshis. This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah. Oh yeah, it's your boy Crypto Blood, and welcome to another episode of my two Satoshis. It is Monday, and I gotta give a shout out to my subscriber Malcolm McFly for the song request. Nas, New York State of Mind. This is a classic off the Illmatic album. Shout out to all my Nas fans out there. And what's going on, people? Welcome to another episode. Hope everyone's doing well out there today. We're going to be looking at Goldman Sachs. Yes, they are changing their tune, their stance on Bitcoin and cryptocurrencies as an asset class. What does that mean for us as investors in this space? Because, you know, Goldman Sachs really is a legendary and well-respected investment banking firm on Wall Street. So what they do really reverberates through the industry, and that is all institutional and big money that will follow their suit. So we'll take a look at this article out of Coin Journal about Goldman Sachs cryptocurrency reassessment as an asset class. Secondly, we have, and which is the main article for today, billionaire hedge fund manager Ray Dalio. I don't know about you guys, but I'm a huge fan of Ray Dalio. I read his book, Principles. I think it's a great book for anyone who's in business, who's looking to be a better business person. You should definitely check out that book, Principles. But back to the subject, Ray Dalio, finally, it took him many years. He was a very big down player of cryptocurrencies, and more so Bitcoin, has now revealed that he hodls Bitcoin. This is big news as well, just as big as Goldman Sachs, to be honest with you. Ray Dalio, I think, has one of the biggest hedge funds in the game, especially on the bond side. So we'll take a look at this article, and I'll give you my two Satoshis on that. And then lastly, we've got Chinese miners are abandoning ship. They're jumping ship, guys, because there is a crypto crackdown coming out of China. At least that's what some Chinese officials have been warning. So we'll take a look at this. You know, China holds the #1 hash rate for Bitcoin on the network. And so what does this actually mean for the security of Bitcoin? So the higher the hash rate, the more people mining the blockchain, you know, the Bitcoin network, the higher the security is, and the harder it is for a 51% attack on that network. So it's just interesting to see this. I personally think it's not that big of a deal, but I'd love to hear your two Satoshis on that after we take a look at this article out of Coin Telegraph. Again, all three articles coming up on today's episode of My Two Satoshis. Let's get it. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. So you know what time it is. Look at that chart, Crypto Damas. Yes, I'm telling you guys, I think we're finally going to take a move to the upside at this point. You see how steep this trend line is? This move down was pretty violent and pretty relentless. Every uptick was sold off by the bears. So I think at this point, though, as you guys can see, we've broken out of this outer trend. So for me, I think if we can hold it for the next couple of hours here, honestly, I would say next 6 to 12 hours, we can hold above this trend line, then we're going to head higher here, guys. We're heading all the way back up to, in my opinion, somewhere around here. All right, if I just draw a line all the way across, that'll put us somewhere right there. That's $47,000 Bitcoin, roughly, give or take. Depends on what exchange you're on, but I think that's where we are headed to test. It may even be a little bit lower at 43,000. If you want to use that as a marker, you could. So I'm going to put a line, or just move this line up to 43,000 and change this color to green. All right, so this is where 43,000 will be the first marker. If we can break through that, then 47,000 would be the ultimate area of resistance for us, in my opinion. And then at that point, as I stated on Twitter earlier, I think we will hit this area and head back lower. It may have to play out over the span of a few weeks, even maybe a month or so, but ultimately I still think, guys, we are heading lower to try $20,000 Bitcoin, or 22, somewhere around there, which is right around this area where I have it scribbled in the bottom right corner. So that's where I think we're heading from a macro standpoint on Bitcoin. And so let's take a look at the first article here today. We've got Chinese Bitcoin miners abandoning ship ahead of the incoming crypto crackdown. So 3 Bitcoin mining companies have announced plans to wind down their operations in China following stern warnings from Chinese officials. So Bitcoin's general downtrend continued on Monday, as you guys can see, despite the coin showing a strong 17% bounce overnight as the coin continues to nurse its wounds. Its recent 43% drop from its all-time high. More turbulence could yet be in store for Bitcoin and broader cryptocurrencies. I've said this for the last month or so. Okay, several large Bitcoin miners opted to cease operations in China this past weekend following the news that Chinese authorities were planning a crackdown on cryptocurrency mining. So this morning, 3 Bitcoin mining pools has announced that they've planned to halt activities, one being BTC Top, which accounted for as much as 2.5% of overall Bitcoin hash rate during the past week. And another one is Huobi Cryptocurrency Exchange, an offshoot company called Huobi Mall, also announced on Sunday that they would no longer sell crypto mining rigs in China and that it would suspend its mining operations there as well. And then lastly, last Friday, Hong Kong authorities announced an impending ban on cryptocurrency retail trading in a move that would restrict trading to only accredited investors with more than 1 million in portfolio. So 3 of these Chinese major trading associations released coordinated warnings against cryptocurrency investing last week. So that didn't help with Bitcoin's and the cryptocurrencies move down. Bitcoin's hash rate, a measure of how much computing power, as I told you guys at the beginning, dropped by 30% leading up to the commencement of the Chinese recent spat of warnings. But at the end of the day, we've had many of these coins over the past few months have jumped 500%, 2,000%, 3,000. You have to take a breather, and this is actually a healthy move. I was hoping that we would make a move downward from here, $60,000 Bitcoin range back, instead of doing it from $100,000, because that would make a lot more mess, create a lot more carnage in these crypto streets. So I'm glad that we're seeing this pullback happen now. That will set us up to build a new base around 20,000, somewhere around there, and we will move higher from there to ultimately hit the $100,000 Bitcoin level. That is a big major number for us. That's a 50 whole number. $100,000. That's going to be, I think, a big break for us. A lot of whales that I've known in the past have mentioned that they will be taking a lot of profit at $100,000 Bitcoin. Is that the end of the bull run? I don't know. No one can really tell you. It's a 50-50 guess at that point. But I'm just telling you, expect some action in the crypto markets when Bitcoin hits $100,000. Action to the downside is what I'm saying. All right. So, yeah, I think, with these miners leaving China, the ones mentioned here aren't the major ones. So it's going to be interesting to see how this all pans out. Them shutting down in China doesn't really mean anything. They can move their operations to other countries in East Asia. So it's not really the end of the day. It doesn't mean that the Bitcoin network security is going to stay suffering from this drop in hash rates. I think it'll eventually pop back up. Those companies will move to other countries in East Asia or even somewhere else. So it's really about, where you can find cheap electricity to run your mining operation. So we'll have to see what happens there, but definitely wanted to let you guys know that these miners are starting to leave China because of this ban. Next, Coin Journal. Goldman Sachs reconsiders cryptocurrencies as an asset class. So a forthcoming report from the investment bank shows that cryptocurrencies have performed strongly this year compared to traditional assets. Goldman Sachs hasn't always been on board, though, as you guys probably know. Last year, it concluded that cryptocurrencies weren't an asset class at all due to a range of reasons, such as they don't generate cash flow like bonds or earnings through exposure to economic growth. But then the investment bank backtracked somewhat, hiring a VP of digital assets last year and restarting Bitcoin futures trading in March of 2021. Now it appears Goldman Sachs has reevaluated its position on cryptocurrencies just 1 year after its denial of this asset. It is now releasing a new report called Crypto, a New Asset Class. Pages from the forthcoming report were shared on Twitter by Ake Capital founder Alex Kruger on Saturday. So the report opens with a discussion on whether cryptocurrencies can be considered an institutional asset class. By talking to several experts in crypto and finance, CEO of Grayscale Investments, which holds more than 3% of Bitcoin's total supply, was unsurprisingly an advocate for cryptos, suggesting that investors were attracted to the scarcity of the asset and it was a great hedge against inflation. Galaxy Digital Holdings CEO Mike Novogratz and Goldman Sachs co-head of Forex strategy Zach Pandal were in agreement, while New York professor of economics Noro Rubini, not a surprise there, argued that cryptocurrencies couldn't be considered an asset class as it has no income, utility, or relationship with economic fundamentals. Wrong on all fronts. My God. The report goes on to present a range of data on cryptocurrencies and their performance. It shows that Bitcoin and Ethereum have performed strongly year to date compared to traditional asset classes. Listen, there is not going to be any comparison to any other asset class when it comes to Bitcoin. That's why I say it's cool to have precious metals, equities, bonds, even you want to have real estate, but a little will go a long way with cryptos. You have to have some cryptos in your portfolio, in my opinion. Even like 10%, 15% of your portfolio being cryptos in the long run will completely outperform the rest of your portfolio. So you got to have that. You don't have to get a whole bunch. Even at this point in 2021, a little will go a long way. If you're looking at a 3-year, 5-year time horizon, you won't be upset, believe me. And don't just bet on one crypto. You need to spread it around and do your research. I'm going to be doing a video here soon that gives you some pointers on if you had only $1,000, what you should do with that $1,000 in cryptos. What would Crypto Blood do with $1,000 in cryptos today? I'm going to do a video that goes over that, so stay tuned for that. Lastly, we've got hedge fund billionaire Ray Dalio disclosing that yes, he does hold Bitcoin. About time, man. About time you admit it. Ray Dalio, the hedge fund manager, during an interview at Consensus, revealed that he holds Bitcoin on his portfolio. During this conversation, Dalio revealed that he would prefer Bitcoin over bond in an inflationary scenario. He said, personally, I would rather have Bitcoin than bonds, and added, I hold some Bitcoin, he says. Dalio changed his stand on the top crypto like many others towards the end of December last year, and since then has been quite bullish about it. Earlier, the billionaire criticized Bitcoin for its volatility and claimed its high price fluctuation would not make it suitable either as a form of payment or store of value. So, I always have this debate with people, as a payment, it's not that great. Bitcoin isn't. It really isn't. Many of these tokens, cryptos, aren't great for means of payment because of the price volatility. If you're talking about a stable coin, yes, using a crypto stable coin is great for payment. Now, store of value, on the other hand, Bitcoin is excellent for that, aside from its volatility. You just draw a chart, look at it over the last 5 years. Clearly, has been the best store of value out of any other asset class. And so this is why I say that we're in the beginning stages of this crypto boom, because smart money really gets in early. Smart money is just getting in. So if smart money is just getting in, then they're trying to build a base in this burgeoning industry. So don't think that you're too late. Smart money is always in early. Okay, that's why they're called smart money. They control the narrative. So if they're just getting in, when I say just, in the last year and some change, the MicroStrategies, the Ray Dalios, the Guggenheims, all of them, if they're just getting into this space, then you've got some years left to really make a lot of money and increase your net worth. So think of it that way. Smart money just getting in the last 12 to 18 months. So you've got a lot of runway left with this thing. All right. But that's pretty much it for today, ladies and gents. Make sure you guys comment in the section below. Make sure you thumbs up as well. That's very important. And shout out to my man, Malcolm McFly, for the song request, New York State of Mind. And if you have a song request for my channel, all you have to do is comment under any of my videos with the hashtag song request, and I will get it played. It's your boy Crypto Blood, and that's my 2 Satoshis for today. My man, people, holla!